No matter how many election cycles you've lived through now, what we know is that, and I'm sure you've seen, elections bring a bit of a wild card. And this year is certainly no exception. It might be the wild card of wild cards. For the second time in history and the first time in most people's memory, we've switched to presidential candidate mid-election period cycle when the voting was already done, essentially. And then past that, we've seen a massive shift in terms of what the country feels is important. We've seen demographic shift sides. And which way this is going to shake out, we're not really sure now. In terms of the housing market, which is what we're worried about here, we really didn't get a lot of insight until the vice presidential election. Now, the concepts were out there, but nobody really talked about it. Now, what we got out of that, or the vice presidential debate, I'm sorry, what we got out of that was, two pretty set sides as to where everybody stood. And the Republicans brought up the concept of a couple things. One, they suggested that we use federal government lands that are unused to develop new houses. Which lands they're talking about, we're not 100% sure, but that's an option. They've brought up immigration issues, obviously, is something they drive home all the time. And then they've also suggested driving down the price of fuel and transportation, thus, making the delivery of a lot of the raw goods cheaper and helping it to become cheaper to build new homes and new infrastructure to go along with the homes. Now, the Democrats have agreed with some of that in bits and pieces along the way, but they've also presented a potential government assistance program, which there have been, numbers up to $25,000 in assistance. How that gets to you, we're not 100% sure. What we know historically, if you've been through these things before, is that they promise things up front to get the vote, and then whether or not they take place is to be determined if they can actually get all this stuff enacted. And then when it happens is, again, up for debate. But the potential of anything happening, whether it's building and repurposing land or offering a government assistance program, that's not going to happen overnight. That's going to take everybody getting together, coming up with a plan and agreeing upon it, and then instilling it into the American public and educating them on it. So it's not going to drastically change the housing market as we go forward. Now, generally speaking, what we know is that the election in any year creates a small temporary pause on the housing market. It's for two reasons. One, obviously the attention of the nation shifts for a couple weeks, especially once we hit, close to November, and we're almost there. And then also, it seems like once you get out of November, it's Thanksgiving already, and people are getting ready for the holidays, planning holidays, getting ready for Christmas, the whole nine yards. And so the attention just shifts. So historically, we start to see a slowdown as we move into November and December because of the holidays. But the election it causes a pause just because of the distraction. So how those numbers shake out, though, for you, it brings up the question of, is now the right time to buy? Is now the right time to sell? And I think really for anybody that's in that situation, that's always a question. Do I wait? Do I time the market? Well, let me provide you with a little bit of data so that you can make a better decision for yourself. So in terms of home sales, over the past several election cycles, like we've talked about, there's traditionally a slowdown, and who supports that is Ali Wolf, who's the chief economist of Zonda, and she's confirmed that, in fact, the reason why there's such a slowdown is that mostly people feel uncertain and hesitant about making big decisions like buying or selling a home, and they perceive an election outcome could have a real impact on their financial situation and then also the local area that they live in. So it's obviously a pivotal time, but it's very short-lived. Typically, December sees a bounce back. Now, according to the Department of Housing and Urban Development, which is also known as HUD, and the National Association of Realtors, they put together data that shows 9 out of the last 11 election cycles, we've actually seen an increase the following year in home values. Now, with that, according to Bankrate, home values have appreciated during the past election years, and they've outpaced the surrounding election years. So a Bankrate analysis of the Case-Shiller data has shown that home prices rose an average of 4.84% in 9 of the last 11 election years since 1987, compared to an average of 4.44 in the surrounding 28 election cycles. So, based on that, you might think that the presidential election is actually a good thing for the housing market, but you kind of have to dig in because it's a little bit more complicated because there's things that surround that. So, in recent memory, the last election cycle that actually caused a downturn the following year was in 2008. But that actually wasn't due to any party. There was a worldwide financial crisis. In this country, we had an overabundance of housing being built. And then, along with that, we had a mortgage crisis going on in our own country as well as some other countries, but it kind of all snowballed. And it really didn't matter who was in charge at that point. We were going to be in a problem. So, we saw the housing bubble is what you could essentially call it here, although the entire country called it a recession. But in terms of the housing bubble, we saw nationwide home prices plunged 12%. So obviously that didn't keep up with everything. But then also in 2021, that was the greatest year for any home values since 1987. Since we, in recent years of tracking this, home values across the country went up 18.9%. In the Philadelphia market, we're actually up a little bit higher than that. And what caused that boom had nothing to do with anything to do with any party or the election or any of the policies that they instilled. Everything had to do with the economic recovery from the pandemic that we were going through and the historically low interest rates, and then with that a boom in inventory. So mortgage rates are also obviously a big deal. So they're going to determine what your monthly payment is. So naturally you want to know whether these rates tend to go up or down. So based on the data by Freddie Mac, who controls a lot of the mortgage industry, mortgage rates have actually declined from July to November in 8 of the last 11 election cycles. And that's really kind of been the case right now. If you remember this time last year in November, we were in the 8 range, and currently nationwide, we're in the mid 6s right now. Now, a couple weeks ago in August, we hit the 52-week low for our country in terms of mortgage rates. And then kind of supporting that was the Fed doing their first interest rate cut since 2020, which shows some good signs of the economy and where interest rates are going. Now, with the election, we also had a job report come out that was better than expected from Powell and the Fed. And that caused the market to react a little bit and interest rates to go up. That being said, all of the experts out there, whether it's Bankrate or Wells Fargo, Bank of America, going through 2025, they're still calling for a slight decline. So moving on from the aftermath, as we move through this and go into 2025, we can assume that we're going to continue to decline. So what lower rates can translate to is a lower monthly payment, but lower rates also mean more buyers come to the market. Now, where we're at right now is that within the 6 to 6.5% range, we have about a study done by Zillow where it says that that gives about 13% of the buyers feel comfortable entering the market. The magic number that we're after is the mid 5s, and where we're headed is the mid 5s. So as we creep lower and lower into that, we look at a 50% consumer positive ranking towards they'd be willing to enter the market, whether they're on the buy side or the sell side. So what that's going to mean is, one, as we are already show data showing that we're trending towards that, and we combine that with the fact that typically the year after the election, home values go up. If buyers have more spending power, we know historically we're going to follow along with that. And there's almost a guarantee that the trend is going to continue where home prices go up. Now, locally in the Philadelphia market, that's all staying very true right now. If you look at September's numbers, whether it was Delaware County, Chester County, or Montgomery County, year over year, we're somewhere in between the 9 and 10% range for home value increases on the median price range. So in terms of, what all this means, obviously presidential candidates, like we said, hype things up. They talk about all these programs, they promise you the entire world. And what we know is that And economists tend to agree that that first year doesn't really matter and it doesn't really have a major influence on the housing sector. All the plans that they're suggesting are probably going to take the entire term to really have an effect on these things. Now, if we start offering free money, like one party is suggesting and offering assistance, that's definitely going to drive home values up, and particularly if the interest rates are combined with that. So that's going to be a massive increase. So now's really the time to make your decision if you're in the market. And then the opposite end of that is that if you're waiting for home values to decrease by the government supplying a greater inventory of housing, everything else that they're suggesting, in terms of building more, is it's not going to happen overnight. It's going to take 2, 3, 4, potentially 5 years for that to even happen. So, if you're confused right now and you're sweating it out and you're wondering whether or not now's the time, the real thing to do is look at your financial situation, obviously, where it is, where we're probably going. And then also, you need to really look at local statistics, the school district and the county that you're purchasing in, so you can understand how to make the best decision for yourself. There's no such thing as timing the market, but there is such thing as looking at the data to make the best decision for yourself. So if you need help with that, please feel free to contact me. And if you know somebody that's in the market right now, share this with them. Thank you so much, and I hope you have a wonderful day. Thanks for being here.